but I want you guys to aim high. And so just the fact that that's even possible, the fact that you could create financial instruments to be able to take advantage of a global event, this is what we're here for. And so just the fact that that's even possible, the fact that you could create financial instruments to be able to take advantage of a global event, this is what we're here for. And so just the fact that that's even possible, the fact that you could oh, have some feedback noise. Okay. Are we live on YouTube? We are. Welcome back, everybody. Big breaking news. There's a lot happening in the world. I'm going to try to break it down as best I can. So Iran threatening some kind of retaliation, but also at the same time, the back channels are saying that there is now open dialogue with the Iranian regime. Ukraine, Russia, there's been some demands on both sides, but there was a ceasefire on the table, but now it kind of seems to have been rolled back. Same with Gaza. Ceasefire was on the table. Both sides started playing dirty because when you have soldiers on the front lines that have just been seeing war, and then they get a message downstream from their higher ups who haven't been on the ground, and they're telling them just to chill out, even though they have the advantage in a certain area or whatever it is, there's going to be some elements of the armies that are going to be sending rockets on both sides, and that's why it kind of makes the negotiations tougher. But I think we're inching closer. Biggest news I want to talk to you guys about is the new Treasury Secretary, who he is, a little bit of his background, and why we should kind of keep an eye out. Because while I do believe he's capable of orchestrating this recovery that we've all been looking for, basically bringing inflation and prices down, getting the spending of the federal government down, improving the regulatory environment so that we can improve productivity, onshoring manufacturing. I do believe that they have all of those objectives and they're capable. But he's a sketchy guy. We got to talk about who he is. So stay tuned to that. So I'll give you guys Jerome Powell's most important quote from last week, word for word. Let me see if I can have it here verbatim. He said, click the link in the description to sign up for our weekly webinar if you guys are interested in learning how to trade. He said this word for word. You guys can Google this. You guys can fact check me on this in real time. All right. Tariffs go into effect April 2nd. So the markets are kind of all eyes on that. And I think that this correction that we've been seeing here is kind of the markets anticipating those tariffs going into effect. So there's two camps right now. It's kind of good for us to stay high level here because there's always there's new news coming in every day. If we stay 30,000 feet up, I think it'll be really easy to understand what's happening here. So the two camps that we're seeing right now are the people that, I'm not even going to write this all out, but camp number one believes that the tariffs are going to go into effect. And this is going to have significant implications on prices, supply chains. If the cost of getting all of the raw materials here is going up, then the manufacturing of those goods is going to go up and they're going to pass that cost on to us, the consumers. So there is an element of people that think that these tariffs are legitimate. And so those kind of like the saying I've been hearing is rhetoric versus reality. Now, I told you guys this in the past. There's the second camp, and this is kind of where I'm in, is that I believe these tariffs are tactics and not taxes. These are negotiating tactics in order to get these other countries to cooperate. And I think that just by the language and kind of the positioning of the White House, you can kind of tell that these aren't really meant to go into effect. I think most countries will bend before April 2nd, which is the deadline for those tariffs. So we put tariffs on Mexico and Canada and other countries. Those actually might go into effect unless Canada and Mexico agree to whatever the terms are. Now, the ones that genuinely matter are going to be the ones with the European Union versus Russia. And then China is the single most important one. So the White House has kind of expressed leniency on the China tariffs. They said they're going to make some exceptions. They've even mentioned exceptions for the Canada and Mexico tariffs for the automotive companies. So U.S. auto manufacturers can still freely trade here in the Western Hemisphere. So the China tariffs, the reason those are more important, they're a much bigger trading partner, obviously. And then much more of our core essential goods come from there. We're talking medications. We're talking medical equipment. We're talking all of our core technologies. We kind of have this elephant in the room with Taiwan, with China, and so we can impose tariffs. But if they start blocking off trade between Taiwan and the rest of the world, it's going to make basically all technology more expensive because those core chips and those semi the Taiwanese semiconductor company is the largest provider of those raw materials for all batteries, chips, and basically the central computing, like the brain of every computer that we use in the world, every phone, every car, every gaming console. And so if they want to cut that off, there's going to be serious implications there. And that's why I think that Trump has expressed some leniency. Now, Trump did have a meeting, I believe, with Xi Jinping. And as far as I can tell, there's a cooperative agreement here. All right. So I think short term, we've already priced in the tariffs. This is kind of the summary here. Markets have priced them in. And then right now, we're sort of in this indecision period where the pessimists, the doomsday, kind of doom and gloom people think that we're going to go lower. They think these tariffs are actually going to go into place, in which case, those Mag 7 companies, the top 7 companies in NASDAQ, take a significant hit. Talking about Microsoft, Google, Amazon, and the rest. Amazon, a lot of those goods come from China. A lot of the tech providers, most of their hardware comes from China. And so that's why you kind of we're seeing this consolidation here. The rationalists, and I'm kind of in this camp, they're already bidding the stocks back up. Okay, I don't think most of these tariffs are going to go into effect. I think it's all just talk, not talk, it's tactics. And I think that stocks at these prices, especially if we're going to look at the individual names, if we're going to go in and look at the Apple and Tesla and Microsoft and Netflix and all those, they're actually at pretty good prices. And so I think most of the major institutions, Fidelity and Schwab and BlackRock, they're seeing this as a discount. This is a Black Friday sale. And so I'm in the optimistic camp. I do think that we've seen a bottom in the market. And if it's not a bottom, then I do think that we're in for a correction. Like if we have another leg of this sell-off, I do think that we're in a bullish rally now. And then I think if by the time that this April 2nd deadline, we get some clarity about if these tariffs are actually going to go through, this thing's going to sustain. And then we're going to have a break of the highs and all-time highs. If we get to the April 2nd deadline and there's a lack of clarity, there's kind of confusion about which tariffs are on. Some countries are getting exemptions, some specific US companies are getting exceptions. Then I think that we just see that indecision play out in a risk off sentiment, which causes a sell off. So for now, I'm in a bullish rally. This is my sentiment right now. And then in the medium term, we're going to have to wait for the April 2nd deadline because in a Trump administration, you can't just assume, oh, they're not going to go into effect or they will. We don't know. He could be serious about it. And if there's anything I know about Trump's negotiation, because after reading his book, is that if he's going to make a claim, he's going to stand by it. So if they don't budge by April 2nd, they will go into effect. All right, let's get into the technicals. Oh, wait, no, I had a story about Scott Bessent first. You guys want to do Forex Factory data news? Or do you guys want me to fucking spill the beans on our new Treasury Secretary? Put a one, Forex Factory economic news. Put a two, Scott Bessent, sus, George Soros. One or two? Let's see. We got Shan, put two. Let's see, we'll get a quick voted. People, Cash Patel. Okay, the one nomination that I'm still excited about, I guess I would say three. Number one is Tulsi Gabbard, but I think that she's very quickly realizing how dirty the intelligence networks really are, and all the changes that she walked in with, kind of that eager beaver attitude. She's gonna hit a brick wall here pretty soon. RFK, still excited about that. Make America healthy again. Take the crap out the food. Let people stop dying off just like the stuff that we're consuming. Stop feeding kids shit that's banned in most countries is non-consumable, right? Basic stuff. And then Dan Bongino, what is it called? Deputy Director of the FBI. I used to watch Dan Bongino's content on YouTube. I think the guy is pretty serious. I think he's pretty radical, but you need somebody like that to reform the number one enforcement agency in the world, law enforcement agency. And so I'm pretty excited about those. Then I started looking more into the other nominations. Marco Rubio, I still don't know how I'm feeling about that. Then I get to Scott Bessent. And this one completely slipped under my wing, did not pay attention to his nomination hearing at all. Okay, in case you guys don't know, I'm a nerd for trading history, right? So I've read most of the big books from all the biggest traders, including George Soros. who is the number one Forex trader in all history of all time. That's just kind of undisputed. So his George Soros's fund is the Soros Fund Management, SFM, one of the biggest kind of hedge funds in the world, and the two biggest trades that have ever existed, recorded history, at least in the hedge fund world, are the Soros Fund crashing the Bank of Thailand by shorting the Thai baht, and then Black Wednesday, 1990s in England, the crash of the pound sterling, which was also kind of really led by the Soros Fund. So billions of dollars in these trades, the biggest Forex trades ever placed. At the Soros Fund Management, there's three key players. There's George Soros, who's kind of who's the money behind the operation. There was Stanley Druckenmiller, the trader who was at the pilot's seat, driving the ship, taking the trades, managing the positions. And then you had Scott Bessent, who was the analyst, finding these opportunities and finding these plays. Scott Bessent was the head of the London office during Black Wednesday. He was the head of the team that shorted the pound sterling, kind of like the guy who was the lead on the team that made that world's biggest trade. And now he's this Treasury Secretary. So let's kind of wind this back. George Soros, Trump, mortal enemies, right? George Soros is funding all of Trump's opposition, funding district attorneys all over the country to run against Trump's nominations, funding district attorneys that basically don't prosecute crime in Texas and California, funding district attorneys and prosecutors in Texas to fight the state against the immigration crisis. These are basically just sabotaging Trump all the way through. They're not close. Like water, oil, right? Tom, Jerry. Now you have George Soros' number three guy as the head of the Treasury Secretary, nominated by Trump, asking him about he's in charge of the piggy bank now for the US. Everyone's talking about Elon this and Elon that. We have the world's smart, we have the new Edison in charge of basically like auditing the government, doing a financial audit, which I don't know if you guys know this, but like I had a finance degree coming out of school. I could have gone into accounting. I could have been an auditor, right? It's not the hardest job and it's not rocket science. I'll put it that way. So I'm not really worried about Elon Musk looking through the spreadsheets and figuring out where we're spending on Nicaraguan penguin, research, right? But Scott Bessent, so after that pound sterling trade, Scott Bessent leaves the fund 2005, okay, then goes to start Key Square Management or Key Square Capital, whatever his new hedge fund was, gets a $2 billion seed funding from George Soros, directly from the Soros fund. So Scott Bessent is a billionaire. Now his fund is worth like $5 billion or something. He's the Treasury Secretary, but the money in his fund is George Soros's capital. It's an IOU. Do you guys see the conflict of interest here, or am I just looking too far into this? All right, well, Roy, 2005 is a long time ago. Key Square Management starts it up. 2006, 2000 to 2012, he's a professor at Yale. 2012 to 2016 goes back to work for Soros, but it's not that long ago. Then goes to manage Key Square Capital full time, right? With a fat funding round. I think they claim that they've returned most of the capital to Soros back in 2020, but they pledged to divest of all those assets after his nomination. So I don't know, something to watch out for. You literally have the person who is orchestrating all of the sabotage against the current administration. His like number three guy is now like in charge of the money of the country. Okay, something to watch out for. We'll talk about at least something productive regarding Scott Bessent, which is the top, like the three pillars of what the government's trying to do and what the head of the Treasury is really in charge of. Most people look at Jerome Powell because we're traders. We kind of, we're looking at interest rates and how that impacts markets. But I think the Treasury Secretary has a much bigger impact on markets. So I'll give you guys those three main themes to watch out for. Basically, this next like 4 years of the presidency. These are like the main pillars. Okay, so I'm gonna put this in plain terms here. Bring spending down. All right, this is going to be government spending. So we have a massive deficit, which means that we are spending way more than we're bringing in. So a lot of people are like, well, Roy, how do you spend more as a country than what you bring in? Because if you don't have the money, How do you spend it? Well, you can issue debt to yourself. Basically, you can print the money out of thin air and say and issue it in the terms of treasury bills and just say I'll pay you back later. Pay myself back later. That's what we've been doing. And so there's a thing where if the economy grows fast enough, you can pay yourself back and it kind of works out. Really shady system. But then in the last administration, they took the spending from like 18% of GDP, the federal government spending, up to like 25%, which is a massive change in a short amount of time. And that's completely exacerbated the deficit and then the total, like the debt crisis that we have. Because when you print a bunch of the money, you don't just pay it back dollar for dollar. You got to pay it back with interest. So if you print $1 trillion and there's 3% interest on that, that's $30 billion a year. And if our if the debt is like $20 trillion, which it is right now, you're paying hundreds of billions of dollars a year just in interest. You guys get where I'm going with this? And so there's a pressure, number one, with high interest rates, those treasury bills, you actually have to pay back more in interest payments. And right now we're basically just in a race to be able to afford the interest payments on this debt every year. Because it's by 2030, it's the interest payment on the debt, not the debt, not the federal spending, the interest payment, like the interest on your credit card, just the interest is going to outpace the total money that the government brings in. So like imagine like your house, you have your principal and then you have your interest. Now imagine just the interest on your mortgage is more than you bring in every month. Well, how are you supposed to eat? How are you supposed to pay for the principal in the house? How are you supposed to pay for the car, insurance, right? So there's a serious crisis here, bringing spending down, big deal. Number two is bringing down the deficit. And number three is improving productivity, which is GDP. Like if we start implementing AI, if we make everything more efficient, if there's technology that's being implemented in these companies and things become more productive, there is a way that we can outgrow or outpace the debt. Because then you'll be bringing in so much money every month. It's like when you start trading. So let's say you are in that scenario where the interest on your house has gone crazy and you can't afford to eat, but now you have trading money coming in that's outpacing your regular income. Now all of a sudden, even though you're in a shitty financial situation, you got to find a way out of this contract. You can still afford to go month by month, year to year, right? And so the goal here is that you grow the economy fast enough to outpace the debt, and that's one of the ways. There's like two camps on this one too. I'm not going to bore you guys with this, but there's the deflate the debt away, or sorry, inflate the debt away, which is you print so much of the money that the money that you owe back to yourself, the trillion you owe back, it's not worth a trillion anymore because you done printed so much new money that it's like now it's worth like 500 billion, right? So there's a way to like basically destroy your currency in order to pay back the debt. That's what's happening in Japan. We don't want to do that. The other one is to cut the spending, pay down the deficit, okay, and then improve productivity at the same time, all while avoiding inflation and avoiding a recession. Okay. So it's like we can think about inflation and recession as like freezing to death versus burning alive. They both suck. The inflation crisis is if we're imposing tariffs on everybody and the supply chains are starting to get messed up and things are more expensive, prices are going to go up at the grocery stores and at the mall, everything. That's inflationary. The other one is lowering interest rates at the same time, which is what Trump is trying to pressure Powell to do. That's inflationary on the asset side, meaning that stocks, crypto, houses, all of that goes up, which is honestly good, as long as consumer inflation doesn't go up. Okay. Um, so those are inflationary things. Now, avoiding the recession is that if you're imposing too strict or too harsh of a tariff, that's why he relaxed the tariffs on the automotive industry, because those could backfire. Imagine we start getting into a trade war with China and all of Elon's cars are made in China. Now all of a sudden it's going to be very tough for us to be able to do business. And so that's why you can kind of see the language there sort of relax with certain countries that are actually like they're impactful to the trade. Mexico, Canada will be okay. I think we'll survive. Um, so yeah, do I think they're going to be able to pull this off, this magic trick? I think Jerome Powell, all the pressure was on him to do the soft landing. Now I think it's on the Trump administration. There's going to be a short-term pain because if you're going to finally fix like the broken arm that you've been avoiding or like that one back pain that you've been building on for like 10 years or 20 years or 30 years, and you're finally going to go get it fixed, that short window where you're starting to fix it, it's going to suck. But then after the suck, guess what happens? You're in a much better place. You can wake up in the morning without the back pain. So brace yourselves, okay? Let's get into, yeah, Scott Bessent. Look into him. Look into the pound sterling trade Black Wednesday. You guys can learn a lot about that. Sketchy character. And I really think that Trump should keep him at arm's length because I don't know, you have the ops in your circle. No, no. Okay. Let's see what we have on the calendar this week. Last week, obviously, Fed meetings and the press conference. That was the biggest news. We have flash manufacturing, consumer confidence, final GDP. Okay. GDP. This is, GDP is released in three different parts. There's like the first version. The GDP numbers are the least accurate, and it's really hard for folks to trust these numbers. Like even the government doesn't even trust their own numbers. They asked Scott Bessent if he trusts the economic data to make decisions for U.S. policy, and he said no, but it's the best they got. And I think that we can do better than that as a developing country, or as a developed country. But it's released in three parts for a reason: preliminary, advanced, and final GDP, because there's revisions made. So if they had, like, they didn't get all the data, they kind of just sampled the data, made a quick, not a quick, but like it was a limited analysis of the real number. And then after 90 days, when the quarter ends, you get the final GDP number after all the numbers have come in. And so we're expecting 2.4%. That's the expectation, which is not bad. The Atlanta Fed, like 2 weeks ago, had posted something like we had negative GDP growth in the last quarter. I don't think that that's going to come out, but this is actually really big to watch because if there's a hit to this number, if it's lower than we expected it to be, then we could see another dip in the stock market for sure. But if it comes out at 2.4 or above, then we're going to see stocks fly. And then we have core PCE inflation measure still climbing 0.3% month over month. So we still haven't really tackled the inflation crisis. All right, let's jump on the charts. NASDAQ 100. This is the instrument I trade. I'll show you guys big picture first. So I explained that we've seen this correction because of the anticipation of the tariffs. People thought they were going to be disastrous to the economy. And so the markets are always forward looking, typically by 3 months or 6 months. So because of the expectations, they were selling off basically for the past 2 months or for the past month. Now that we've sort of bottomed out, we've had a pretty, I don't want to say a significant rally, but we've had a meaningful jump here in in the lows. And so the two scenarios are if the market is going to go in for a second leg, like a whole second drop, because markets typically move in twos, we'll see something like this. You guys see this massive drop off here? You'll see a correction deep back into the range, and then you'll have the second leg down. Okay, and whether that's going to be a continuation, like whether we see a correction and it drops, or whether there's a sustained continuation, I do think that we've reached the bottom here. And that's how I'm going to treat it until we break. If we break, then we have lows right here that we can aim for as the true bottom. But for now, let's assume this is our floor. Get down to the 4-hour time frame. Okay, so we're assuming this is our monthly support. That gives us the lows. And then let's go ahead and mark off our highs right here. So price is clearly in a consolidation range. We can see 1, 2, 3 touches on the downside. We had support, support, turn resistance, resistance, resistance. And so there's enough kind of touch points here that we can verify the price is in a trading range. Okay, mark off our lows and our highs. So you guys know how we trade here. The assumption is that if the market's in a trading range, it's buy low and sell high. So where most people are looking at the support here and assuming the continuation, my primary assumption, as you guys know if you've taken the class, my primary assumption is actually that we're going to see a pushback inside the range. Whether we see like a liquidity grab here, a lot of people are probably trying to short the highs of this range right now. There's probably a lot of sells just sitting right here, which is not a bad place to take a sell, let's be honest. But if we all, I've been trading long enough to know on Sundays, you'll typically see anybody who's trying to enter too early, you'll see this liquidity grab. You'll have a massive push above the range to these highs. Okay, this is like the Wyckoff high, which is the high right above the range. For members, this is like the breaker, like the Adam's apple of, right before you start the range. This is how it looks on the sell side. Okay, so then you would draw, this would be your high, this would be your low. Oh, I got this thing drawn backwards. All right, this would be your high, this would be your low. And then what we'd find here is that the real sell zone is just above the range. So it'll jump up, grab liquidity, and then head back down. And then there's going to be the sells, and then the retest just above the range. That's going to be the second entry. So if you miss the first sell-offs, there's always that second entry back down the range. We did this last week. We went through the before and afters, which I can show you guys right here. I mean, so this was the main idea. I think I even had this. All right, so this is before the move even happened. We were sitting at a trading range. We had this first touch point. I was assuming a push above the range, exactly what I just described, and then a sell back down. So what ended up happening is this was that sell-off. Price breaks above the range, comes back down, retests, head and shoulders, and then breaks back into the range. All right, we have a trading range right here. Market breaks above the trading range to grab liquidity, breaks under, retests, and sell off. And so I'm expecting something very similar here. All right, any questions, comments, concerns? We can talk about big picture stuff if you guys want, but I'll just leave that for later in the week. So if this is going to be a genuine breakout, we'll see a push above the trading range, a closure. It'll break back inside, and then it'll form new highs right here. So the definition of a downtrend is when the market is creating lower lows and lower highs. So you can tell when a market's going to shift its direction when first it establishes a new higher high, and then it establishes a new higher low. Okay, so if the market breaks above this range, establishes a new higher high, then we establish a new higher low, then this is going to be the perfect entry price to take this thing all the way up. Cool. Put a one in the chat. We're on the same page, people. It's not rocket science. It's a box. It goes up and down. Most of you guys, you took the wrong classes. I get it. It's okay. But that's why we're here. I'm going to give you guys some clarity. Drop a like on the stream if you guys are watching this on YouTube. I said after the what? Uh, just wanted to say the boys are doing a good job on the lives this week. Keep them in there. Yo, Omi, you heard him. You heard the man. The team will be on. Now, if that we might be limiting the streams here, we might be just trading with the Chart Addicts team mostly. And so we will be offering a way for everybody to get involved in the Chart Addicts squad, become a member, and get access to those morning live streams. But as far as I can tell, I think we'll be on a few days this week. So stay tuned for sure. For surely. All right. We got a couple of responses here in the Zoom. Everybody, we're good? I know Roman's got it. I know Christine's got it. I know Shan, Carlos got it. What about the rest of y'all? I just broke down geopolitics, exposed our new Treasury Secretary, broke down NASDAQ, masterfully. Went through the entire economic calendar and broke down the three pillars of what to watch for in this administration. I'm asking for one reply in the chats, people. Okay, now we can just hang out here and chat shit. Kind of, if you guys have any questions about economic policies, if you guys have questions about tariffs, if you have questions about non, non-finance stuff, maybe politics stuff that might impact markets. If you guys want to talk about the UFC fights and Leon Edwards losing yesterday, we can talk about that. I'm disappointed too. I had high hopes. Hope is not a strategy. That's what I learned yesterday, people. So we'll take some questions. We'll hang out here. Oh, check out link in the description. Sign up for the webinar, people. It's a free webinar every Wednesday. Learn how to trade directly from the team that hosts these streams. And if you guys are ready to sign up for the master class and actually just learn the strategy, get on the road to profitability sooner rather than later, check out the link in the description too. Sign up for the master class early week or early first week of April and get your trading life together, people. If you don't have a plan of action, if you don't have a consistent strategy that's duplicatable, that's repeatable, and that's easy to explain, easy to execute, this is your shot. This is something that could work for you. Okay. Let's see what questions we got. Zoom members, anybody here got questions? Or are we good to go? We can call it a night because Sunday. I know it's late. A wise man once said, "Better late than never." We had to hop on these streams, get the value out, no matter what time it is. Shan said signing up for both. Shan knows. Also, Apex is doing another 80% off. They opened that window back up. Use promo code Chart Addicts if you guys want to get a funded account. What else? Check out the FX Summit 2025 conference. Latin America, we're taking over. We went to Bogota, Medellin. We went to Mexico City. Next stop is going to be Puerto Rico. We have Costa Rica on the tour. We have Cartagena on the tour, and then obviously the big summit. Love to see you guys all out there. Get your trading up so you guys can come hang out with us at the FX Summit.
Hey, bro,
Uh,
you hear me, bro?
yeah, what's up, Shan?
And I'm chilling, man. I'm trying to figure something out, bro. I was up on my account, but like, it seems like they don't let you. Is there a way that you can trade less than one contract on, like MNQ or anything for Nasdaq?
Yeah, you can. I mean, you can trade the mini contract. You can trade the Nasdaq mini instead, and that's gonna be way less risk. So, like, if you're doing one contract on the Nasdaq, the macro contracts, like the regular ones, then
Mm-hmm.
that's where you're gonna see those massive drawdowns and like the big fluctuations. If you go to the micro contracts, then it'll be like you'll have to throw five contracts on there just to be able to get like $100 risk, you know? And so it'll like if you've traded on meta quotes, it'll be like the S&P or SPX versus SPX mini. Like they have the mini contracts on futures too.
Okay, and that's through. Would that be through Apex? Like, if you had like a TradeAvate account?
Yeah, so if you go up there to the Tradeovate, you hit plus sign to add a new symbol. You can do the NAS. Does anyone know what the actual ticker is for the NAS mini on Apex or on Tradeovate?
MNQ.
Is it MNQ5 or like does it matter?
No, I just do the continuous contract, MNQ, exclamation point.
All right.
And that's through.
Okay.
All right,
The
cool, cool.
continuous
Appreciate it.
contracts, they auto roll over, Christine.
Yes, the one with the exclamation point auto rolls.
That's awesome. Okay.
I appreciate that, Christine.
No, for sure. Good question. And yeah, just take it up in the chats, guys, like in the VIP chat. Just chat it up. If anybody has questions, everybody here's like trading around like kind of similar accounts, similar things. So anybody here can answer questions. Let's open up that discussion. Parlay on Real Madrid tomorrow, coach. Is Paul on here? I'm gonna have to call my consultant, my our chief football consultant. Yo, we did sponsor a soccer team. This is kind of crazy. It's like a random side quest that we just decided to put up. The FX Summit and Chart Addicts is sponsoring a semi-professional soccer team out there in California. They're number one in their league, right? We're gonna make the announcement here pretty soon once they're in the lead in the playoffs. So pretty cool stuff. In terms of Real Madrid, but I couldn't tell you. I couldn't even name three players on Real Madrid right now. All right, people, let's get ready to make some money this week. It's keep it simple, rest your mind, get yourself mentally available to just be present and execute your system. We know what we're looking for, we know what we're waiting for. And so let everybody, money in the markets transfers from the hands of the impatient to the hands of the patient. So let people dig themselves into a hole early in the week. Let people do make those beginner mistakes like just wanting to take trades right when the market opens or just not being patient and waiting for the right entry point. We're looking for the specific fib retracement here. If you're not waiting for those trades, and you're just going to be falling into the same traps. The answer to the test is already in front of you. Let the market come to you, make your money, rinse and repeat, rinse and repeat, rinse and repeat, rinse and repeat. It's not a sexy game. It's a game of just being present. And if you're going to sit there and like imagine a construction worker or somebody who's working with their hands every day sits there and just ponders what he's doing and why he's doing it and whatever. Like maybe for a job that you hate, maybe you should be thinking a bit more, right? But you're not going to last at that job very long. There's people, so with something that's an opportunity like this, you can't have that mindset of I need this to work by a certain date and now you're trying to control the timeline. Instead, you just have to be present and you have to just show up, and then you're gonna lift your head out of the water in 6 months and realize, oh shit, like my life is a lot better. I have a better quality of life because of this additional income that I'm bringing in. And so, don't look at the clock. Focus on your game. Be in the game. And that doesn't mean you're gonna go on the sidelines like during the basketball game and ask your coach or your trainer what the stats are and how you're doing with your left hand. No, no, that's for the weekends. That's for the off season, right? During the games, keep your eye on the ball. Everything you've done in training will show up in the game, right? So work on yourself. Personal development is the single most important pillar to trading. So if you're like, well, what do I do in my meantime if I'm not supposed to practice trading to keep my mind off of it? Like, what am I supposed to do? Is work on yourself physically, work on yourself educationally, learn more, work on yourself organizationally, get your life together. You do all these things, the clarity in your mind starts to come in, you will be much more effective at trading. The trades just seem to show up. But when you're too much in your head, when the mental state is not in a place to just be intuitive and to be in that flow state, that's where you're going to make mistakes. It's where you're going to get in your own way. All right. So this week, let's get ready to make some money, be in the flow, and let's get ready to crush it. Take those limitations off yourselves, people.